Welcome and get ready to dive into the thrilling world of investments, where numbers dance, money talks, and the unexpected always keeps us on our toes. Today, we are going to look at a stock that is absolutely on the fly in the first half of 2023, up more than 109% at the time of this video. More importantly, we are going to explain why we think this stock will still have tremendous upside potential. If you like our content and would like to see more videos like this one, please hit that subscribe button below and give us a like. Your support is highly appreciated, and thank you. The stock we are going to talk about is SoFi Technologies. In the next 8 minutes, we are going to unveil the top 5 reasons why SoFi is a prime investment opportunity right now. So, first off, the United States Supreme Court recently struck down the Biden administration's plan to forgive or waive a large number of federal student loans. This is a big catalyst for SoFi in the near term because the company dominates over 70% of the private student loan market. With the Supreme Court's ruling, the pause in required federal student loan repayments is set to end soon. The first of those repayments will reportedly be due in October. Because SoFi Technologies generates significant revenue from helping borrowers refinance their student loans, the ruling gives SoFi a big win. Now, we know the latest news is that the Biden administration unveils an updated plan to get around the ruling. But imagine this. The student loan debt in the US is a whopping $1.7 trillion business, with most of it being federal loans on pause. Even if a small fraction of those borrowers turn to SoFi for refinancing, it could massively boost the company's bottom line. Plus, SoFi has quite a unique and rock-solid customer base. Using an all-digital banking model with no physical facilities, SoFi has targeted well-educated, affluent, urban millennials. And the ecosystem that keeps customers coming back for more services, just like Apple. And guess what? There's a massive untapped market out there that is ripe for SoFi's taking. Let's talk about the flywheel effect that SoFi has going on. Their business is like a funnel, capturing customers with their awesome financial services, like the SoFi App, SoFi Money, SoFi Invest, and SoFi Credit Card. Then, they use the data they gather to upsell these customers into real money-making products, like home mortgages or personal loans. Anthony Noto, the CEO of SoFi, calls it the Financial Services Productivity Loop, where the goal is to increase the number of customers using their appealing products, while also upselling more of their lending products. SoFi is aiming at vertical integration, going upstream to offer a full suite of products and services, and downstream to make sure their customers keep coming back for more. Imagine this scenario. A customer signs up for a SoFi bank account, sets up direct deposit for sweet interest rates, and then uses SoFi to manage their mortgage and even seeks advice from a certified financial partner. It's a smart way to deepen the customer relationship and offer them more tailored financial solutions. And here's the best part. SoFi is doing all of this in a way that's not scammy or predatory. They genuinely want to help their customers, and that's what makes their growth sustainable. So it's no surprise that investors are excited about the stock's potential. With all these strategies in place and a clear path for growth, SoFi is setting itself up for some explosive development. Value investors are the savvy folks who carefully examine all aspects of a company's business and decide if the current market cap is truly worth the price based on the fundamentals. On the other hand, growth investors are looking not just at the current value, but also projecting how much the company will be worth in the next 5 years as it continues to flourish. Now, let's talk about valuing companies, and one common method is the price-to-earnings ratio or PE ratio. For major banks, the average PE ratio is around 8.5, while smaller regional banks sit at 13.5. So, where does SoFi fit in? Well, with their current PE ratio, when calculated using their adjusted earnings, it's a bit high at around 30. And to make it more interesting, they're not even considered profitable by GAAP accounting standards if we exclude costs like stock-based compensation. But SoFi's growth game is off the charts. While the US retail banking market is expected to grow around 4.5% annually, SoFi's growth is 5 to 10 times that. Let's take a look at some rapid-fire growth figures. Their members have shot up to 5.6 million, a whopping 46% year-over-year increase. And products that are used by a single member, a cool 8.5 million, also up 46%. Financial services revenue has tripled, up by a jaw-dropping 244% in the last year. And let's not forget about those deposits, soaring to $10 billion in just 3 months, with 90% from direct deposit customers. Now, let's crunch the numbers even further to see how this explosive growth affects their stock price. If SoFi maintains a 40% annual growth in adjusted earnings for 3 years, their PE ratio would hit 11, nicely in line with other banks their size. But if they continue to grow beyond that, the PE ratio would drop, leading to potential stock price surges. Here's the clincher though. While SoFi's financial services segment might have been in the red before, they've hit a major turning point. The CEO announced they're finally making a positive variable profit margin, covering all those customer acquisition costs. This means more customers equals more moolah for SoFi from here on out. Reason number 4 to invest in SoFi. They're disrupting traditional finance with massive market potential. With over 500 million legacy bank accounts tied to companies that drag their feet on money transfers, SoFi can swoop in and revolutionize the game. No more waiting for days to get your funds. They're all about quick, efficient service. Those traditional legacy banks are missing out big time. They lack the personal touch and a tech-first approach to solving their customers' problems. That opens up a golden chance for SoFi to swoop in and claim those customers as their own. The majority of banking customers are stuck with multiple banks because they don't get the seamless experience they crave. And that's where SoFi, being all customer-centric and slick, can come in and win them over. So, what's SoFi's grand vision? It's simple but powerful. It's to help their members achieve financial independence. And they're making it happen by providing top-notch service that's second to none. Just check their rating on the Apple App Store. A whopping 4.8 stars with over 180,000 reviews. People are actually loving what they offer. But that's not all. SoFi is constantly expanding and taking over new territory. They acquired Golden Pacific Bank, dabbled in crypto trading, and even rolled out a rewards program where you can score free stocks by being a good loan customer. Oh, but hold on, we can't just forget about their secret weapon, the technology platform. They've got their own slick tech infrastructure supporting their apps, and they're looking to be AWS on Fintech. They're not just running their show, they've got Robinhood's app on their turf too. So what's SoFi's game plan? A slew of fantastic services like Connect, an AI chatbot that nails customer service, PRP to tackle fraudulent activity, and buy now, pay later. Super nifty stuff if you ask me. They're not afraid to innovate and keep winning over customers in the evolving fintech space. SoFi also has limited direct competition. Sure, there might be some players out there, but none can compete directly with SoFi's unique blend of premium products and a loyal customer base. It's kind of like Apple's magic all over again, drawing people in and hooking them into their ecosystem. So, should you invest in SoFi shares? Well, given the rocket performance in recent months, it may be prudent for investors to wait for better timing. But there's no denying that the future looks incredibly bright for this fintech powerhouse. SoFi is setting itself up for big success as it continues to outshine the competition and capture millions of legacy bank accounts just waiting to be claimed. Remember, this is just the beginning, and the more we see SoFi's potential unfold, the more compelling it becomes as an investment opportunity. So, if you're looking for a company that's shaking up the financial world and has a clear runway for growth, SoFi is definitely a contender worth considering. So thank you for tuning into today's video, where we uncovered the incredible potential of owning SoFi shares. If you found this information valuable, make sure to hit that subscribe button and ring the notification bell so you never miss out on our future investment insights. We love hearing from our amazing community, so don't forget to drop a comment below. Share your thoughts and questions about SoFi shares, or let us know what other investment topics you'd like us to cover next. Remember, financial success starts with knowledge and action. So if you're ready to take charge of your future, hit that subscribe button now and let's embark on this wealth building journey together. More to follow, and thanks so much for watching.